After buyers reached out to me, one of the first questions I ask is this: have you been pre-approved yet? But what does it mean to get pre-approved, and what can a pre-approval offer you as a home buyer? Hi everyone, Sean Ryan here with the Blue Coast team, and we're looking at the second of the 10 steps of the home buying process, and that is getting a pre-approval. Let's go over the difference between two similar sounding terms, and that's pre-qualifying and a pre-approval. Getting pre-qualified is much different than a pre-approval. When they pre-qualify you, they're not actually going down and looking deep into the credit check and pay stubs and all those great things. When they pre-qualify, they just look at how much you're making per year and they said you should qualify for that. So totally different. So it gives you an idea how much you can borrow, but doesn't commit the lender to actually giving you a loan. A pre-approval, on the other hand, is a much more thorough process. It means that the lender has actually checked your credit score, verified your employment and your assets, and agreed to give you a loan as long as all the information checks out. Getting pre-approved for a mortgage is one of the most important things a home buyer needs to do. It's reassuring to the seller because it shows that you're a serious buyer to the seller and that you've been pre-approved for the specific amount of money. So now that we know the difference between a pre-qualify and a pre-approval, let's look at how you can get a pre-approval letter. First, you need to call a reputable financial lender and request a pre-approval. When you meet with your financial lender, you'll have to fill out an application with your income, your assets, and all your debt information. Lenders will ask for your driver's license or a passport, social security number, proof of income, pay stubs, and determine the length of your current employment. I mentioned assets and debt information there, and well, that's pretty important. If you've purchased, let's say, an RV, a cottage, a boat, or a car, and have successfully paid them off, or close to paying them off, the lender, well, they're gonna look at you more favorably. If you, on the other hand, have racked up a ton of debt and financing of multiple assets, your loan may be negatively affected. You'll also need to show you are able to make the down payment and show you're able to pay for all the closing costs. They want to make sure you're who you say you really are, a citizen of your country, and that you're employed, and they want to know how much you've earned year to date. All this info helps them make sure you have no issues making your mortgage payments. Once this is done, the lender does several things. It pulls a credit report from one of the major consumer reporting agencies like TransUnion or Equifax. Then it checks your credit score against its own underwriting requirements for the loan products. Then it verifies employment, income, and assets with your employer and your financial institutions. Altogether, this can take anywhere from a few days to, well, a couple months depending how ready you are. For most people though, it usually doesn't take that much time. Once the underwriter has finished all these steps, they're gonna give you a pre-approval letter. This letter is gonna state how much money the lender is willing to lend you and what the interest rate will be on that loan. Now that you're pre-approved, it's time to move on to step 3, making that wish list. Thanks for watching, and remember to put Sean on your lawn.